Hello and welcome to this on-demand session from Artlogic Connect, which took place in September 2025. We're so glad you're here. This year's conference welcomed over 4,200 people from across the globe, making Connect one of the largest online gatherings in the art world, a space where our community shared ideas, explored new perspectives, and imagined what's next for the market, a positive, opportunity-filled future. Artlogic is proud to host Connect as part of our mission to support the arts community and help every corner of the art ecosystem thrive. We're delighted to share this session with you so you can revisit the insights, the conversations shaping today's art world, all at your own pace. Thank you for joining us, and let's get started.
Thank you so much, John, and hello to everyone joining us today. I'm very excited to kick off the first panel for this year's Artlogic Connect Summit. As John said, my name is Bethany, and today I am joined by two brilliant guests who bring both commercial and operational insight into today's conversation. So to introduce my guests, I have Gabby joining us, who is the Commercial Director at Goodman Gallery. Gabby oversees the gallery's financial operations, sales, and compliance processes with commercial strategy across the UK and international markets. Gabby's background is in structured finance and trading, and he has spent over 18 years working at the intersection of global capital markets before turning his focus to the art world. I am also joined by Steve, who is head of operations at Pilar Corias, where he leads everything from logistics to compliance. As the gallery's AML officer and senior registrar, Steve has been at the forefront of building systems that translate legal requirements into practical processes without losing the pace that galleries need to maintain. Today, we are going to be discussing and unpacking a key question, which is, can galleries stay discreet in an age of disclosure? But before we sort of jump into the conversation today, I really think it's important to look back from where we are now. I want to take a moment to sort of rewind to that 2008, 2009 period, all the way up into 2020. Obviously, that was right before a lot of changes happened, before the pandemic, and I think with today's discussion, before regulation came into play. 2020 brought a lot of things, and of course, with it came the regulation in the UK and the EU within the art market. I think we can all agree that suddenly the rhythm of sales really started to change. The important thing to note, obviously, when we are talking about regulation is, I think, to contextualize it. So for those who are joining us today who are unfamiliar with AML and KYC, AML is anti-money laundering, KYC is know your customer. And these regulations are sort of required of art businesses, galleries, dealers, auction houses, to name a few, to basically verify the identity of their clients, but then also to understand things like the source of funds, and ultimately assess the risk of financial crime in these transactions. Now, it's important to note that when we talk about these transactions, the threshold is €10,000 or £8,500. So any sale over that value is then under this this process. And I think everyone, whenever we talk about this, takes a deep breath, because we can all agree that that is a pretty small threshold when we consider what the, value of artworks are. Now, these obligations and the regulations are definitely designed to prevent money laundering, terrorist financing, and other illicit activity. And it is all done so by conducting what is called customer due diligence. So almost overnight, these regulations were placed onto the art market. And I think definitely everyone that I have worked with always says they were left thinking, what now and how do I manage this process? In my role at Arcata, we advise in this space and we offer digital solutions for our clients to make this process feel manageable and less complex. So I obviously don't want to paint regulation as the enemy. In many ways, this market, I feel, is playing catch up. We're sort of 10 to 15 years behind other sectors when we're looking at the technology that these galleries are using, auction houses, or just generally speaking, the digital infrastructure. So with all of that in mind, I'm going to stop talking and start asking some questions. I want to start today's conversation by asking, to you both, what has really changed for you in terms of, the volume, the velocity, and the process within sales within your galleries, especially when we're looking at sort of that change at 2020 when regulation came into effect? And within that, how much would you say that shift is down to regulation being introduced versus the broader market evolution itself? And I'm going to throw that question to Steve first.
Thank you. So I think the 2020 did bring an awful lot of change, with that being regulation, with that also being the UK leaving the single market, with that also being the pandemic, and an enormous amount of change. So it's a natural inflection point to have this conversation. Sales, from my point of view, my perspective, were more based on a singular relationship between sales director and salesperson and their client. And that relationship was paramount. It still is. But now with the influx of regulation, the UK leaving the single market, and AML KYC coming as part of the day-to-day process of receiving and acknowledging sales, it's a wider conversation within the bigger sort of gallery ecosystem, in which multiple other heads from finance to operations and various others are getting involved. It does slow down sales, and it does definitely make sales to a degree more complex. But I don't think the regulation is the key part in which we're seeing the sort of selling market change. KYC and AML happen to be coming around when the market was going through a drastic change. Our market is a global market, and we're catching up, as you say, for 15, 20 years after the fact, when we're talking digital infrastructure and everything else. These galleries are sort of catching up, getting into the digital market, getting into the digital infrastructure. And so I think you are looking at ways in which sales are changing, is the ways in which sales were changing in other markets 10, 15 years ago. Becoming more global, collectors are becoming more global, it's becoming less localized in locations, and therefore collectors are being more discerning and have a wider sort of feeding palette in which they can effectively shop. And I think that tied with regulation and everything else that happened with that period of time has kind of definitely made sales a more cerebral conversation, where we have to have a bigger gallery team talking about the various aspects of closing a deal, and that deal being more discerning from the collector side.
Mm. And Gabby, on your side, is that echoed in your experience at Goodman Gallery, or is it slightly different?
It's interesting, Betsy. Thanks for having me on the show.
Of course.
Coming from the finance world, regulation has been forefront of change for the last 2 decades. Now, it's a hugely regulated industry and more and more scrutinized over the last 10 years. So coming into the art world a few years ago, I was quite surprised that it hadn't filtered into processes and to regulation quicker. And of course, historically, it has been accused of an industry being ripe for money laundering and for fraudulent activities. So, given the fact that a large transaction takes place for an asset and cash being deposited in a bank account, I was surprised not to see that, and I'm not surprised that it is now more regulated. I think it certainly did affect sales initially, although the introduction of the regulations was just pre-COVID, which naturally affected the way sales were made within the gallery space. I think regulation affected a lot of group, and certainly galleries were required to spend quite some time putting in processes and controls in place, and the timeline taken for a sale to conclude has certainly been longer. Technology has helped, of course, and thanks to businesses like yours, has made that process a lot more efficient, and that has helped, I think, matured that subject and the space. I think over time, with introduction of the EU regulations, and also for us, introduction of FICA in South Africa, which followed about a year later. I mean, FICA was in place 20 years before that for the banking industry, but for the art markets itself, just after the EU and UK regulation, that's certainly had impacted the places and helped And I think with transparency for transactions, and I think collectors over time have gotten used to the fact that they are required globally now, not necessarily in Britain, in the US, but certainly if they are transacting in global art markets, they are familiar with the process that they need to produce these KYC docs that you're speaking about.
Yeah. I think that it's that neatly sort of leads on to the next point about the tension point between discretion and disclosure. And perhaps for today, it might be good to, I guess, ground what sort of is meant by both of those in this conversation. When I guess I think about and talk about discretion in the art market, I think of it as the long-standing culture of confidentiality, as you just mentioned. Things like of sort of under-table deals, first name only invoices, and trust-based relationships. I guess the general belief then that the less is said perhaps might be better. This might be in a pre-2020 mindset, and I guess it's what gave bits of the market sort of mystique. And then disclosure, on the other hand, is where regulation is really demanding that transparency, which you just mentioned, Gabby. Passports, proof of funds, identifying UBOs behind different company structures. And the whole time we're going through this process, it's documenting it in a way that's traceable and it's reportable. And I guess it's the opposite of how a lot of deals used to be done in the market. With that in mind, given that regulation is now legally a requirement and transparency is part of that, do you think that the art market's idea of quote unquote discretion is still serving that gallery collector relationship, advisor collector relationship, or is it something that we've all been hiding behind to avoid adapting? And maybe I'll throw that to either of you who wants to jump in and take that question.
Well, I think discretion is still hugely important in the art market. So I think client confidentiality in terms of sales and who's buying what does not need to be disclosed to the market. People must realize that. Certainly, the necessity to implement controls and the regulations and to comply by regulations by obtaining all the documentations required for KYC. Now that's fundamental, and we know that because the regulators audit us on a annual basis, and there's already been reasonable fines in the art markets, and obviously, of course, in the financial markets, billions of dollars. Banks have been fined billions for money laundering and so on, and terrorist financing. So we're seeing that in the art market now too, and it's hugely important. But there's certainly a space for discretion and client confidentiality within the gallery client space.
And do you agree with that, Steve?
I definitely agree with Gabby's point that disclosure doesn't mean releasing or making the market aware of who is purchasing what and what their collection is made up of. And, should they want to keep that kind of thing discreet, it doesn't mean that that's going out into the market and therefore, it's going to get made into the public space. Mm-hmm. I think the sort of side of disclosure and discretion is what's really being disclosed by whom to whom. Mm-hmm. From a GDPR point of view, and from the way in which we personally put in our controls, I'm actually sort of the only one who can have access to all the sort of KYC documentation, everything from private individuals all the way through to your complicated company structures and trusts, etc. And I think the only person who's that's being disclosed to is me. Now, obviously, I will have to report to my senior directors, but there's only so much I can legally share. Mm-hmm. And I take that very seriously, and any gallery or auction house or advisor should. But so it's the client and collector who's bearing the brunt of the disclosure, and it's effectively sort of how much they want to share. And I'm not 100% sure how far that goes into discretion. There's the obvious point insofar as there are transactions and there are situations in which a client or an advisor could be operating on behalf of someone that comes to light is not a fair representation of who they were representing. And so this gives galleries, and especially artists, a degree of protection outside of the regulatory responsibilities of we know who our collectors are, to the man or woman, and so we therefore are completely aware of whose collections is going into. There isn't that we're going to invoice it to XYZ, that's on the invoice, and it's to so and so limited or LLC or whatever. Yeah. So we have a sort of a greater understanding of our client base. The discretion doesn't necessarily have to be out of the conversation in that mind. The clients will just have to get their heads around the fact that we're not asking for an enormous amount of invasive questions. It's most of the time quite simple ID documentation that you would need to open your bank account, that you now need to be accessing over 18 content on the line. In the UK, you now have to supply details of age verification. If we're going for a more globalized and digitized world, this is just going to become the norm. And there's going to be how much you're willing to sort of be discreet with in 2025, which is a much greater era of sharing of personal information and data. And the art market's really catching up with that. It doesn't necessarily mean that we are therefore indiscreet with that data. We just have to be collecting it for a regulatory approach.
And Steve, that's an important point. I think also with the evolution of technology, where you can collect information on secure links directly to a portal secure site where only certain people have access to review the documentation, run reports, and sign off that client. I think that has helped over time. Certainly in the early stages of the implementation of regulations, we were collecting sensitive information via WhatsApps and emails. That certainly was a concern to some clients, some collectors, and technology has helped.
Do you, I guess, within that, when you do have those instances with collectors or clients you are working with who might have, I guess, an aversion to what your sort of whatever services you might be using or a process that you have in place within the galleries, what does that internal escalation process look like for yourselves? Is that something that, how do you nurture that relationship when there is often friction? Because perhaps what might be seen as normal for us asking for these things is not the norm of the collector, especially if they are not based in the UK, in the EU. US clients often find this a little bit, I guess it's a newer process for them perhaps when acquiring artworks. How do you deal with that friction point?
It's been some time now, so most major collectors have got over the hump of requiring to do so. So they're either submitting their second round now because there's a review process. So we're lucky that we've got through that. I think internally we have we have controls in place where only certain senior people can senior person in the area can approve a review and approve a new client if there's a question mark over that client, and we have an internal MLRO. Requesting the information from clients, there was certainly pushback for a period from US collectors. Once they realized that they understand that, well, either from us or via their art advisors, that this is a global requirement now, then it has become easier. These days you can't open any account doing anything without submitting KYC. You open a bank account, you open a brokerage account, you even pay in a third party account to pay for an expense contract. You have to submit some KYC docs. So it's become the norm, and certainly where advisors have been helpful to collectors, that's been helpful for us, where they provide the administrative duties of collating information and submitting information to us online.
Yeah, I think I think for us, from an internal point of view, I think the starting point is really, really good training for our sales staff. And I come from a registrar background, and sort of when this legislation came in, it's largely self-taught initially, as I think most amps are. Which trying to get our heads around it. Arcata and other competitors weren't yet to market, and so we were all sort of trying to figure it out on our own. And I'm not as lucky as Gabby to have a financial background, so I was really trying to learn it. And the way I've approached training with my sort of colleagues is to reteach them how I taught myself, which was relating it to the industry all the time. I mean, I've got this absurd PowerPoint that I do to train stuff. It's full of, ridiculous memes, but it does trying to drive home the point of why we're doing each bit. And when a client pushes back to you on X, why we're coming back with Y. We're not just being difficult. And it's not just Steve in the registrar's office being a giant pain, as I'm sure, our reputation precedes us. I'm trying to basically have a sales team so they can go back and say, okay, they've only submitted X, we need Y, and being able to handle that conversation in the initial straight away. And I think that's a really important part of before you even get to internal escalation.
Yeah.
The client is a salesperson, knowing what they're talking about, knowing the why as well as the what, and being able to be on that spot so that initial friction point can quite often be immediately discarded. You can immediately set your client at ease, being like, we're ever so sorry, but because there's a source of funds requirement, if you're going to pay through the LLC, we're just going to need this little bit. I'm sure your accountant has it. Would you like to come for a coffee? And that conversation being part of it, as opposed to sending this stock email with a questionnaire that's going to take 20 minutes to fill out, and it's going to go to someone who is potentially a PA for a major collector or in a completely different department, perhaps in the curatorial team. So that I think is the first point before you get to internal escalation. The way we always managed it as well is I'm kind of in copy of in some way, shape, or form throughout that sort of initial post-sale process. When that before that voice has gone out, when the deal's agreed, and the sales assistants, etc., taking over, I'm kind of there. And so if the problem, it's an immediate like, Steve, how are we going to navigate this? And it's always thinking of like why the client is reticent. And most 99.99% of the time, it's because they either don't want to share it because it just feels invasive, which we understand. Other side of it is it's possibly an administrative headache, and if these people are in the market for high value artworks or effectively high value luxury goods, it's because they're extremely successful, which therefore they're extremely busy. So therefore they don't want to do it because they've got other things they need to do. And so that you've got to really also then distill it of like, I'm thinking about the client. I'm thinking, right, what's the main reason why they're not doing it? It's because they're extremely busy and this is an administrative headache way too early when they're absolutely obsessed with this wonderful painting. Just want to get into the further awkward shipping conversations. So it's having that internal escalation of trying to have that conversation of why they're not submitting it and making it as easy as possible. Platforms like Arcata would help, certainly, but I think the key point is having a team when they're dealing with AML from everyone who's doing the requesting of really understanding it. It's very dry. It can be it is. It can be very complicated, and it didn't help that the official Treasury guidance came out. It was 3,000 pages long. No one understood it. It was extremely complicated. Everyone then sought legal counsel, which didn't, make it more transparent. And then we were just left with, this. So it's really understanding it in a really concise way, why we're asking for everything we're asking for. Have that run through your team, and then internal escalation before you get to a point where there really is something where you need to go either into an enhanced due diligence process or you need to do further digging on source of funds. That's really necessary. And that's only when you've exhausted the conversational aspect, which is massively underrated and links back to the discretion side of things, which is they're only disclosing this to a nominated officer / MRO, then only disclosing it to someone who's bound by GDPR not to share this privately with the market, with the artist, with whomever. The discretion can come from it's much sort of a softer conversation as opposed to becoming this strident registrar / accounts based. I must have X so that my boxes are ticked and I can go home happy.
Yeah, it's a big balancing act, I think, at the end of the day, between explaining it to the collector with also, I guess, the market is in a bit of a prickly position at the moment. It has been for a while. There is always the ambition to sell no matter what. But, there are moments, especially when we are seeing these flags present themselves, talked about internal escalation, but also knowing individually, if you're on the sales team side, if you are client facing in any respect of your position, knowing also when to put pause on that conversation and sort of what to do next. And as you said, Steve, what the why is, because it's very easy to turn around and say, I need X, Y, and Z. But I think the real, I guess, talent is explaining why that is the case, and also making it feel not too confrontational to the collector, because at the end of the day, they're very important in this moment. I think it's also why just, the idea of discretion isn't disappearing. It's just maybe needing to be slightly redefined, not just by regulation, but maybe by comparison to other markets that we look at. We've spoken about finance, we've spoken about property as well. Steve, you mentioned an important point. Obviously, when the regulation came into play, sort of everyone was, there was a big document that was released with a lot of galleries went to seek legal advice, whether or not that was helpful in many cases, because I think everyone was kind of figuring it out on the fly. What kind of support, internal, external, do you think galleries, AMPs, auction houses really need to actually carry the weight of this obligation properly? Because we haven't really touched on the cost of getting it wrong yet. I'm sure we'll get there at some point, but it is significant, unfortunately. So what kind of support do you see teams really needing?
I think one aspect I think would be beneficial is diversifying sometimes the hiring pool and getting
interesting
bright young things from finance world or other regulated industries who have backgrounds and understanding and knowledge of these processes and how they relate to clients. So I think that's one thing, not necessarily support, but I think that's something that businesses can do internally, and I think would have great benefits across across the business. Other support that I have found most useful is with businesses like Arcata and others like IML, who have provided really, really good initial support outside art-focused, art industry-focused support, from the off, so that we can go there being like, am I insane, or am I right in thinking, this is what I'm thinking, and or have I massively overcomplicated this? Speaking to people who have been adjacent within running galleries who have gone into the compliance side, and that's been a really big. I know obviously you're from Arcata, so you probably sound like I'm saying go with a compliance. Really, it does make a big difference, and I think that is really good additional support. And I think reaching out to various other. I think what would be good is for the art market to potentially have, and maybe they exist, and maybe I'm just not invited, but cross discipline networking events. I don't.
We'll start our own one, Steve. There we go.
It's a great idea. I would love to go to an art market finance networking event where we share compliance stories, you maybe pick up a client or two. I think that's potentially something that we really could support, is having these interdisciplinary opportunities to learn from one another.
I think that is, I myself, I'm not from a finance background. I previously was at Artlogic for quite a long time. So my background is not in this space, but I completely agree, Steve, that a lot of it is sort of through self-discovery and self-education, because it doesn't feel like there is that sort of centralized, I guess, voice where people can come together and, share their insights. I also think you learn the most from speaking with your peers, if that's about what's going on in the market, if that's about, various trends, or if it's about really exciting stories about regulation. It is where you are going to learn the most at the end of the day. And what about for you, Gabby? Do you, because you're finance background, so it's an interesting perspective you have.
Well, I mean, the gallery itself, we actually hired a consultant initially to help us, and one to set policy up, our AML policy,
yes,
and also to help us with very difficult or more complex transactions. It was I think a small price to pay for getting it right initially, and we get that policy reviewed by an external party on a an annual basis and signed off. That also helps us, when we do have, because every gallery now is most likely be audited by HMRC, and that person actually helps and makes themselves available for that process, and it's a few hour event. So it's a one extra thing that we've done internally as a gallery. We have implemented global policies on taking the most conservative approach across the different regulations. Obviously, it's quite tricky when you have various different entities. We have 3 different entities in 3 different countries. So we've implemented the most conservative across 3, and then again, as Steve was saying, internal controls in place with senior people signing off on more difficult transactions and having an MRLRO. Training is hugely important, and as it is actually a requirement. And thankfully, people like you have provided the courses online for us to do, which is helpful because so that's an annual event. Those are the internal policies and procedures that we've had in place. So, obviously, from a technology perspective and an operational perspective, that's hugely important, because what we do is we aren't allowed to invoice someone. The system doesn't allow you to invoice unless KYC is in place and has been reviewed.
We do the same.
Extra control, and only one person can lift that in an exceptional circumstance internally. And I think that's hugely important. If we do get paid for an artwork before our full compliance process has taken place, we don't recognise the sale revenue, and we don't ship the artwork until it's in place, and we keep it on the balance sheet. And there has been a case where we've had to keep for a reasonably long time, and until the ultimate beneficial owner has actually been approved properly. So those are the additional controls we have. It does help. It does help having a mind that can look through structures internally. Of course, we have a consultant externally, but they can understand financial structures, because they are allowed, and we shouldn't we shouldn't be telling a client where his artwork needs to be purchased. But if it is in a trust or a complex corporate structure, then it does take a little bit more work on our side and enhanced due diligence, and might take a little bit longer.
I think it's there is often the conversation going around about relying too much on technology, but even technology is always there to support, but ultimately we've had these conversations individually with each other.
Just on that point, sorry, but there's all these different pools of databases that we need to check, PEP lists and sanctions lists, and certainly post the Ukraine war. And there's a grey list and country list. It's almost impossible to do this on a manual basis anymore. You do rely upon technology to test and to test these lists and to spit it out and say, okay, right, he's on the sanction list. We need to do enhanced due diligence. Sorry, not he's a PEP, but we need enhanced due diligence and write a comment. It's almost impossible to do manually, as I was saying.
It's I think completely agree. Obviously, I need it's I agree. I don't think you can do it manually. However, I am of the opinion, and I know a lot of other people are as well, that technology is there to support us in this process. It is not there to make the final judgment. What we are looking at still needs to always have a human eye, and we still need to take a risk-based approach with everything that we're doing. I think that is also because regulation isn't just tightening here in the UK. It's not going away. It's becoming it continuously evolves, and I don't think anyone thinks it's going anywhere. Look, I know, Gabby, you mentioned that the US, it might not be coming in, but there is movement there as well. So we'll see, hold that thought. But I think what is the most striking is when we see younger galleries who might be stepping up into that next level of their sales, of their sort of predominance in the market. These responsibilities are not any different to what you both have on your plates with, you know, very significant galleries in the market. So when we look at the younger galleries, how are they meant to, I guess, get their heads around this whole process? Because it is pretty overwhelming. And it's, you know, the weight of compliance then is landing on the shoulders of people who are not hired, trained, or, you know, there to manage legal risk. And if something goes wrong, then the impact can be quite significant. So I don't think that regulation, disclosure, discretion, any of that is leaving the sort of human element. We have technology there to obviously support us. I guess maybe, do you think that means I've got my eye on the time here, so I'm heading to the wrap-up point now. Do you both think that we need to, I guess, define what this all means and sort of begin to build regulation into our process day to day rather than trying to work around it as it is not going anywhere? Steve, I'll throw that to you.
Steve, go for it.
I mean, yeah, of course, you're going to have to build it in the same way. You know, you're referencing smaller galleries, and you know that building up. It's like anything when you're starting a business and growing a business, you have to start learning all of these processes and requirements, from figuring out your payroll appropriately, having learning how to file your accounts, etc., and everything that you're going to have to do. If you outsource that either to a person or to a piece of technology, neither of which is on the payroll, then you're going to have a problem at some point. So understanding that there's a part of it which is part of doing business. If we're going to be in this industry, it's not going away. Anti-money laundering is, deregulating the art market is not a vote winner, and that is just not going to happen. And so it's a case of, this is part of running an art market participant, an art gallery, an art advisory. If I want to do this and I'm serious about doing this, I've got to learn and understand this at least at a working level. Think about like learning a little bit of French so that you can have a really lovely holiday in Riviera and being able to get around. It's a little bit of the same. As if you want to be doing this and you want to be doing this seriously, then you've got to get a little bit of understanding. Doesn't have to be deep dive, because you can end up hiring people like me, Gabby, or whomever, who can be your expert to do it. But understanding what it is, why it's there, and the broad requirements of your business, and learning that upfront as your gallery grows, that's going to save you a massive headache down the line. And outsourcing straight out to technology or to a complete third-party provider is only going to postpone that. And technology is there to help, but it's a tool, and the tool has to be used by someone who understands how to use the tool. A drill is an amazing thing. I don't know how to use one, so therefore it's useless. It's the same process.
I like that. That's really good.
An electric drill, right?
I'm useless, Gabby. I'm just
I agree with you, Steve. There's no question that it's here to stay, and but I think, yes, technology can help the process, to enhance the process, but certainly it's our responsibility to sign off on every person we transact with, and we're responsible for that. I think younger galleries will probably find this firsthand when they set up their galleries and try and open a bank account for the gallery, because that was probably the hardest thing I did for Goodman Gallery UK. I mean, initially, just to open a gallery, a bank account for a gallery, if you've got a remotely difficult structure, then it is almost impossible. So going through those motions, they'll realize that it's super important to have the internal controls in place for their clients. I hope that one day that can be harmonized, where if a client has a bank account and he's been approved to use that bank account and earn his income and pay expenses out of bank account, I would hope there's some sort of harmonization between that and approval to be able to transact with the gallery. But long way away from that, I think.
So I guess sharing globally a bit of an approval status with other, I guess, verticals, finance.
I hope so.
Yeah, that would be a dream, Gabby. I would love that as well. I think that would smooth up the process for everyone. You know how you can now just share photos by bumping your phone together. Imagine if you could do that with AML and KYC. That would be impressive. Now, I am aware of the time, and I believe this is my call to throw over to some questions, I think, which might be in the chat. Is that right, John? You've just popped
It
up.
is. We've got a host of questions,
Cool.
although I could listen to the three of you talk for the next hours. That would be quite fun if we could do that. However, we do have questions coming in, and it looks like we do have a very global audience. We did a quick shout out for everybody to put in their countries, and there's lots of people coming in from the US and EU. And if you do have any questions, please put them into the Q&A box. We'll try and get through as many as possible. So I'll jump into the first question, which is from Jack. Could you share an example of a sale where the AML KYC process went smoothly and another where it was a bit more challenging? And what made the difference between the two?
That's either, please jump in, whoever would like to take that one.
The vast majority go smoothly. So an example of one going smoothly is, I obviously can't disclose names, but most go smoothly. So a painting, 50,000 euros, US dollars, whatever. Lovely to see you at Art Basel. Really enjoyed seeing you again. Congratulations on your lovely XYZ. As you know, leading in with a little bit of like, I'm sure you're aware. As you know, we're covered by anti-money laundering and terrorist finance legislation. If you could just confirm if you're paying from a personal, business, or trust account, that's actually a good example. Is asking them upfront what account they're buying from. Are they buying through a personal? Are they buying through a corporate entity, or are they buying through a trust or other legal vehicle? And then they'll come back being like, it's going to be my private checking account, like smashing. Just send an ID document and a proof of address within 3 months to this link, and it's normally done on the money. And I think another reason it goes smoothly is that we have an internal process where KYC documents come into a sort of a portal, and I check it every morning, kind of first thing. And that's part of it is that KYC and AML is being routinely checked. If you wait for it to come in, it comes in a busy moment, and you're like, oh, I've got to deal with this. You might leave it, and then you'll have the client that's getting frustrated. An example of something that has gone sort of more complicated and why that was, there have been a few transactions from complex company structures. So a company owned by potentially two companies, which there are potentially trusts as UBOs or as shareholders within them. The reason those are harder and they don't go so smoothly, or they most of the time go through in the end, is because you'll ask the initial question of what are you paying from? I'm paying through a business, and you get the documentation and once you get it, you realize, oh, there's another business, and then you have to go back and have the conversation. If we keep asking these questions, are we going to go up and up and up? If that's the case, I think we need to jump on a call and explain so that we can lead you through why we're going to be asking for all of this.
Yes.
And I think that if you aren't able to have those conversations, that can be an example of how it doesn't go so smoothly.
What about, and maybe to ask a question against a question, because I hear this quite a lot. I'm paying for my own bank account. All of a sudden, payment reaches the gallery. We've cleared AML and KYC. Payment hits the gallery. Oh, it's actually come from a business account. How do we manage that process?
We've been through that process. One, it could be that person could be the beneficial owner of that company, but we've had other examples where it's come from directly from via a company or via an advisor, and we've had to go back to the client and state that it has to come from the person that we approve.
Yes.
And that person is either a person, individual, or a company. So we haven't signed up the company and performed KYC on the company. Then we have to set up a company, and the invoice has to have the person's name on that we receive payment from. So whether it's a corporate or an individual. So yeah, just further KYC required, and just again, like Steve says, it's a telephone conversation. I'm sorry, unfortunately, we see that cash has come from an entity that we hadn't performed and approved yet, and we need to go through that process with that entity.
I guess that's where the relationship is so important. Then you can't not have the personal relationship then with the client.
You have to, and then that's the most important thing from a sales perspective is that personal relationship. And it's very rare that it's an individual that we hardly know and we don't feel comfortable calling. Those aren't relationships. So from a sales perspective, every salesperson that has a client under his name should know have their number and their email address and a way to contact them and have a personal relationship with them.
Brilliant. The next question is from Madeline. I often find that when I bring up AML KYC requirements during the sales conversations, clients become more hesitant and it negatively impacts the deal. I'm struggling when and how to introduce the topic without turning people off. How can I better navigate this part of the sales process?
No, I mean, we confirm a sale via email after verbally agreeing a sale directly with a client. We can confirm a sale, asking those questions that Steve indicated earlier. Whether it would be purchased in an individual, corporate, or trust, and these are the requirements. The client will then come back to us and confirm which of the three, and then we'd our after sales would go back with a secure link and send these the requirements for KYC in that entity. I think the sale is it's essential that the salesperson understands the process and understands the requirements for KYC when they negotiate the sale, and it potentially can affect the economics of the sale too. So we should try and source that information up front and then request the required information.
Yeah, I find that it's a similar conversation to having a conversation around tax, and you're out there and someone says, I love this work, I'm going to ship to Italy. What are the tax implications? If they're asking that question, then you have the answer in the pocket, but you aren't going to necessarily go into them with it's going to be $68,000 plus this in taxation and customs clearance, etc. Like you wouldn't lead with that. I think, as Gabby says, we verbally agree the deal, and then it comes up in the email, and we try and we include it, these sort of email requests in the sort of the beginning of post sale. So you're going at it, and I think the way in which you're having these conversations makes a big difference. It's not just the content, but it's the way that you're framing it. It's you're going to your client and you're saying, "Congratulations, this is an amazing piece. I'm so excited. Would you mind to let me know what kind of business, what kind of account's coming from? Have a lovely afternoon." And instead of going in really hard, like really early, because there's an anxiety of fulfilling the legislation. As long as you've got it in before the work ships, and we do it before work invoices, then you're covered. And so you don't sort of worry too much about your sort of regulatory responsibilities at that point. Make it right at the beginning of the post-sale. Post-sale's full of shipping and logistics and dates and potentially preferred carriers, preferred agents, insurers, a lot. And if you include it as part of those conversations, I find it's much smoother as they're expecting administrative conversations.
So try to make it, I guess, a bit of like a non-event for the clients. Obviously, it's an event for us.
It shouldn't be. It shouldn't be an enormous, we're going in that discretion again conversation. It shouldn't be an enormous disclosure. It shouldn't be an enormous headache for a client. Most, especially your big blue chip clients, most of them have it ready to go, sitting in a folder, ready to drop in. And so just building it into a conversation about the administration and the logistics once the sale is agreed, I find is the best place to have that conversation.
Absolutely. I mean, it's one of the questions to form part of the overall conclusion of the sale, and the shipping part is a valid point. That is a key question to determine ultimate costs of a transaction, where it's going to be shipped to, what taxes, and which entity, and then we'll provide all information that we need.
I think we at least on our side, on the sort of the platform side of what we do, it is trying to make it, as I said, as easy and non-eventful for the collector as possible. I think our stat is that 98.7% of request links get fulfilled within the first 2 minutes of them being sent, which is amazing. If we're sending something out to a collector, they quickly drop in what they need to drop in. We take that, analyze it, report back to our clients, and on it, we're, granted that there are no red flags that are present, it should be as straightforward as that. And then we can get back to actually working with the client and focusing on the sale and not worrying too much about the regulation that we need to sort of tick those boxes against.
Brilliant. So the next question is from Matt. Do you have any obligation to report up if you have ever got a solid flag on anyone that you did AML on?
I'm sure Gabby's the same. I'm the person you'd have to report up to. Internally, yes, there are external obligations to report out to the National Crime Agency if you are suspicious that there is actually money laundering or terrorist financing going on. Also to the Office of Financial Sanctions Implementation, or OFSI, if the person is a sanctioned individual. So there are external reporting out, not necessarily up. You definitely have to do. When internally, I have a compliance team made up of deputies, and whenever there is a solid flag, there's a conversation held by the compliance team. So a degree of sense checking that I've not gone mad with power, or whatever, that actually we can, have an internal sort of reporting conversation that yes, this is worthy of an escalation.
And that's individual to every gallery. Every gallery will deal with these things. From my experience, every gallery deals with these things individually and differently. So what might be escalated up to Steve may be different to what it is to Gabby, but ultimately there is always going to need to be a hierarchy of sort of...
Yeah.
Probably depends on the size of the gallery too, and how big the teams are. But certainly that external reporting requirement is also there.
That one is the big significant.
Just transaction reports.
Yes. Yeah. The SARS reports could be quite, we definitely report, if we're asking reporting up, that is sort of the highest level of reporting up, because it goes up and out of the business. And there's been changes earlier this year.
Quite important internally, I think, to have that independence.
Yes.
Of a person that actually signs off on a tricky on a tricky client, because I know one of your questions earlier on about some sales people potentially trying to push sales through when it is a tricky structure or question. So important to have an internal senior person internally to make that final call.
You will also always, if you're doing things right, you are going to get a solid flag at some point.
Yeah.
So to not be afraid of them and have your policies in place. Because if you get a solid flag, it means that your works are, your business is attractive enough for, anybody who could be a potential issue. So flags are going to be coming down the road if you're successful, if you're doing things the right way. It's true though. I mean, if you're not getting any flags, then you should probably be worried. Because eventually something's going to come through. Someone is going to have a connection to public money, for example.
Right. Yeah.
Or someone's going to have a family connection in political circles. And they're going to come up and they're going to be undeniable, and you're going to have a process involved in it. And it should be seen as a rite of passage of the growth of the success of your business.
Completely. I think there's other little things that you can also pick up on, phishing attempts for people who are working in remote transactions. That is a huge one that I'm seeing on our side quite significantly at the moment. Perhaps they're not politically exposed, they're not on any sort of regulatory enforcement list, but the name and the email address associated with that person, whoever that may be, has some very clear adverse media against them that links them to phishing attempts that we can sort of see with going around the market, which it's an interesting when you're looking at the reports, it's an interesting thing to see.
Brilliant. So because of the time, I think we'll just do one last question, if that's okay, which is from Gustavo. Hello. First of all, congratulations to the 3 speakers on the interesting talk. Wondering, who are the people that are most reluctant in the issue of AML KYC? Is it new clients or the regular ones?
Good questions. That's for you two, not for me.
I think that the regular ones are typically signed up with us already, and if anything, it's an annual review of their documents and their KYC. So if any, I think it would be newer clients that and or clients that are potentially also new to the market. Not necessarily new to us, but new to the market as well. And those that are looking to grow collections, so probably those that have reasonable wealth but are new to the market. I think those are probably the most difficult. Because typically, narrowly, they are the ones that will probably have their cash in structures. And
I would agree with Gabby. I mean, new customers are inherently going to be harder because they're, pre-existing customers and clients you already have the relationship. It was hard in 2020 when you had existing clients and the rules changed for them, and we're 5 years beyond that now. It's about a decade, and they got used to it. I think the hardest is new clients new to the market that are based in a jurisdiction that is unregulated. Specifically, the United States is definitely the hardest to obtain CDD new to the market. And I'll go one step further. I think the hardest to get documentation is a structure in the United States, probably a trust, that is paying through an advisor. That is definitely the hardest way to get CDD when you're dealing with the advisor and not the direct client, and there's a complicated structure behind them that's new to the market. And that's, I think, why it's so important to have that working understanding across your business, so that your salespeople are aware this client is new to the market. This is exciting. We need to understand how we're going to approach this to reel them in and have them, be a long-standing client with a long-standing relationship, because they'll move into that pre-existing client and it'll be easy.
Typically, those major advisors across the pond understand the requirements now, and so they are getting these new clients, and they hopefully most of the ones we've come into contact with, transacted with recently, have collated the information required and are ready for us.
I think that's a really good point, and advisors in the States have definitely really caught on, and they've been much quicker than often the ultimate beneficial owners. It will just be that you're in that inflection point where the advisor understands the legislation, but it's having the pushback from the client, and I think that's the tricky bit. But you have another, there's another way of looking at it. You can look at it optimistically, and you've got another pair of hands to have the conversation, the good cop, bad cop it, for example. So it can help, but at the end of the day, you will get it through the door, and you will get a sale through the door, and it's unlikely to fall down at KYC point. Because I will sort of say as the last thing, not a very small handful of sales have completely broken down because of the KYC requirement. It's an extremely small number. It's an extremely small percentage. I think having confidence in your processes, confidence in your approach, can give your clients confidence.
Wonderful. Thank you very much for the panel discussion. Because we are slightly over time, we're going to wrap up this session. I want to say a very big thank you to Steve and Gabby, our amazing panelists. I've learned a lot, and I hope everybody else joining has. And also very big thank you to our moderator, Bethany Wolfall from Arcata. Thank you everybody for joining. If you do have further questions for any of the panelists moderator, please do email in to us and we'll try and pass them along. And thank you for joining. We look forward to seeing some further sessions later today. The next one will be starting in an hour with Joe Elliott and Eric Gleason from Olney Gleason. It'll be an in-conversation, and there are also opportunities to join later panels. Thank you very much for joining, and goodbye.
Thank you.